We will now move on to Chapter 15, Purchasing and Insuring a Vehicle. So we do have some knowledge objectives. By the end of Chapter 15, students will be able to explain the factors to consider when purchasing a vehicle, define financial responsibility, identify and explain the types of automobile insurance, list guidelines for selecting and buying insurance, and explain the need to evaluate insurance rates when you buy a new vehicle. And we also have two attitude objectives for Chapter 15. By the end of Chapter 15, students will accept that they will be responsible for any damages if found to be at fault in a traffic crash, and the type of vehicle they drive and their driving record will greatly influence the cost of insuring a vehicle. So let's get started with chapter number 15. Purchasing a vehicle. Buying a vehicle represents a significant commitment in terms of expense and responsibility. Operating a vehicle over time is a process, not a one-time event. When preparing to purchase a vehicle, consider three main factors. First will be safety. Choose a vehicle with features that can help prevent crashes and minimize injuries. Consider a late model vehicle equipped with safety features such as anti-lock braking systems, daytime running lights, electronic stability control, multiple airbags, and adjustable and lockable head restraints. Second would be reliability. Selecting and maintaining a reliable vehicle can prevent most breakdowns. When vehicle shopping, consider these tips. Look for a warranty, avoid excessive mileage, check the history, and conduct a pre-purchase inspection. You should also think twice about purchasing older vehicles. And third, affordability. You may have your heart set on a new car, but it could be out of your price range. Your best solution might be to buy a previously owned model. Many auto manufacturers have certification programs that offer low mileage vehicles that were leased or have had only one owner in the past. Certified vehicles typically feature an extension of the factory warranty. Beyond the initial purchase price, you should expect ongoing expenses to operate your vehicle, such as insurance, maintenance, repairs, and fuel. Insuring a vehicle. Insurance is complicated and may be confusing. Different policies, terms, and conditions influence the cost. Insurance laws vary from state to state. For additional information, contact an insurance agent who can explain the coverage available in your area. So what are the common types of automobile insurance? So there's several. These include liability. Liability protects drivers from claims made by others who are injured or suffer a loss in a crash in which the driver is declared at fault. It is the most important insurance that drivers can have. If drivers cannot afford to pay for damages out of pocket, their property can be sold to pay for it. Liability is divided into bodily injury for injury or death of others up to the amount of coverage in the policy, and property damage for damage to property that belongs to someone else up to the amount of the policy coverage. Then we have medical payments. This covers medical, hospital, and funeral expenses for you and any passengers who are injured or killed in the crash. This coverage pays regardless of who is at fault. Then we have collision. This covers damage to the vehicle caused by collision regardless of who is at fault. This also covers anonymous vehicle damage in the parking lot. Then we have comprehensive. This covers damage to the vehicle caused by anything other than collision, including fire, theft, falling objects, larceny, explosion, earthquakes, windstorms, hail, flood, etc., as defined in your policy. Then we have uninsured motorist. This protects drivers from bodily injury losses caused by an uninsured or hit-and-run driver who is legally liable for the damage. We also have no-fault insurance. With no-fault insurance, the injured party can collect from his or her own insurance company without litigation. The advantage of no-fault insurance is that the injured party gets immediate financial relief without costly legal action. Then we have deductibles. Most policies carry a deductible, usually between $100 and $500, where drivers pay this amount out of pocket before the insurance pays, and this reduces the cost of the policy. Then we have selecting insurance and knowing what to buy. The most important protection against financial loss from a collision is liability insurance, followed by medical payment insurance. This is the minimum recommended. Many states mandate uninsured motorist coverage also. Many financial institutions mandate collision and comprehensive until a vehicle purchase loan is paid off. Also know how much coverage you need. Drivers need to be aware of what coverage they are mandated to carry, as well as the amount of financial responsibility that they are liable for. Also, you should compare policy conditions and exclusions. Policies are contracts that define driver rights and responsibilities, those of the insurance company, and the kinds and amounts and conditions of coverage. Then we have factors affecting insurance premiums. Insurance premiums and policies vary from state to state, company to company, and individual to individual. When comparing policies, drivers should be sure the terms of the policy coverage are similar. So what are some factors that affect the total cost of insurance? Well, we have the type of insurance, because the more coverage you get, the higher the price. Then we have the number of miles you drive each year. The higher the mileage, the higher the price. Then we have the driver's age. The higher the age, usually the lower the price. The driver's address. Residents of urban areas or high crash areas pay more in insurance. Young driver's successful completion of driver's ed. If you complete driver's ed, there's less risk implied and you pay less. Then we have the driver's record. Crashes, traffic violations, and claims cost more. Then we have the driver's gender. Females generally pay less because their crash statistics are lower. The type of vehicle you drive. Sports cars and sports utility vehicles generally cost more. Vehicle usage, as mentioned before, the higher the mileage, the higher the price. The number of vehicles insured with the same company. You pay less. The more vehicles you have insured by the same company, they give you deals. And finally, vehicle anti-theft devices installed. The more features you have installed, the lower price you will pay. There's also several ways that drivers can obtain lower premiums. Some of it we already mentioned before. You can complete driver's ed, keep your driving record clean, drive a conservative car, drive less mileage, use the same insurance company for all vehicles in the family, install as many vehicle safety features as possible, increase the amount of your deductible, and don't file any insurance claims unless absolutely necessary. And finally, we have rental vehicles and insurance. It's important to check all of your insurance options when renting a vehicle. Car rental companies must offer you the option of purchasing collision and liability insurance, usually at a set rate per day. Before you select the rental company's insurance option, check your own automobile insurance policy to see if you are covered. Always check for restrictions in the vehicle rental contract. There may be geographic restrictions that prevent you from driving out of the state or out of the country. The insurance may also cover only the driver and not passengers. And the insurance may be void if the car is kept beyond the return date unless you request a rental extension. And just like that, we're done with chapter 15, which is actually one of our shortest chapters. And just like chapter 10 before, there's no video from AAA for insurance. So we will move on to chapter 16 in just a few seconds.